curve's been steepening a little since the Fed decision, but my question to you is, why isn't it steepening more?
I think it should be steepening much more. Good morning, Lizzie. I think the clear message out of the Fed was that tariffs are both going to be negative for growth and inflationary, the stagflationary impulse. But what they said is they care about the growth part. That's the bit they're really worried about. So, i.e., they're going to ease policy if they need to. They're still talking about 2 rate cuts this year. So that should put pressure on the front end. Meanwhile, they're saying that even though tariffs are inflationary, they're going to cut rates. So therefore, that should see people get concerned about the long-term inflationary consequence. Does the Fed risk making the same mistake that it made only a few years ago of saying that the inflationary impulse is transitory when it wasn't, and have to react really, really aggressive about it? So therefore, that should be a big steepening impulse. And then only whatever it was, less than 12 hours later, we had Donald Trump come out and put pressure on the Fed to ease rates, even though we do have this ongoing kind of inflation pressures, not just from those tariffs, but from also from non-oil commodity prices as well. So therefore, I thought these two dynamics should have seen a real steepening of the curve. We've seen a slight steepening of the curve since the Fed. It has worked, but to me, the 2s10s curve should be much higher. 44 basis points is the 3-year high in 2 years, 2s10 spread. I think that should break in the next couple of weeks. I think it'll happen but into the next 2 weeks. I'm wondering what I'm missing.
Let's talk about the equity market, Mark. S&P is up by, what, 0.4% at the moment on the week. That feels very unconvincing as a bounce. Let's say we kind of remain at these sorts of levels. What is the signal that I can take away from the fact that equities are not, as they have done over the last few years, bouncing back sharply?
Yeah, the price action is just terrible. And I think the takeaway is that, you know, all those people who buy the dip are starting to run into people who just long-term structural outflows that are starting to come out. Now, those long-term structural outflows are very slow, very gradual. They'll happen over several years, but that dynamic we expect to sustain. But they're already sufficient to be counteracting those dip buyers. And I think that reflects the fact that the price action is absolutely terrible. And I think that ultimately we're going to see stocks go much lower over the long term.
Mark, it's a miserable morning for Hang Seng and China stocks today. Really miserable session. The Hang Seng down more than 2%, as is the MSCI China. Is there more room for a bigger correction here?
I think so. I think we've just seen such extraordinary gains in China, Hong Kong. As you know, I'm very bullish in this dynamic. I think that last September heralded the start of a longer-term bull market in Chinese and Greater China assets. I think that Hong Kong is the discounted way to play that. We've seen stock markets up a large amount since then. It's been a volatile fashion, but ultimately they're up a long way in a market that, in a world that's going to much more uncertainty, where other markets are struggling. They've come off a few percent from the peak. They could fall another 8 or 9% here and still be in the longer-term bull market, and that's what I expect to happen.